Joined live from Hong Kong by Mark Matthews. He's equity strategist at Macquarie Capital Securities. Mark, hi, thanks for joining us.
Hi, Mark.
The Japanese GDP data today giving us further insight into the health of the global economy. And I suppose if you're looking at it on its own, Mark, it shows that maybe the global economy isn't as healthy as we possibly thought.
Yes, correct. I think that a lot of people worry about the global economy. I don't think it's any done deal that this recovery is a sustainable one, and that's why the markets are just very, very choppy. They have been so far this year. So with Japan specifically, I think that it's the yen which has the greatest impact on their stock market, and when it strengthens, it doesn't generally do their exporters any good.
But still, you remain bullish on Asian markets, and you say the strongest recovery in the world is in Asia.
The strongest recovery in the world is in Asia, ex-Japan. But the problem with Asian markets is that with especially the exchange-traded funds and the increase in technology and Bloomberg machines and all that kind of thing, they've become much more correlated to global markets over the last 20 years. So in the early 90s, the correlation between Asian markets and the S&P, for example, was just 0.3, and it's risen to about 0.8 so far this year. So if we do see the global economy turning down, if we do see developed economies turning down, I suspect that most markets in Asia will not really be able to defy gravity. A few will, but most won't. And I could be wrong. I think what's very interesting is that the emerging economies continue to grow very strongly, so their percentage of the total world GDP is growing strongly. In fact, if you add up the BRIC economies, they're about $11 trillion in size now. That's really not much smaller than the US at about 15 trillion, Europe at about 16 trillion. The problem is within BRIC, really there's only one which is not a China play, and that is India. Russia and Brazil, because they are basically commodity stories or derivatives of China. So China becomes very important to understand the direction of markets as well.
So Mark, in such an uncertain economic environment, how do we play these markets?
Well, a very smart investor told me at the beginning of this year that macro investors will have their heads handed to them on a plate this year, and he's sort of looking like he was right, because the markets have been very, very choppy. Unless you're a very good trader, you're losing money trying to take a big directional bet. So I would say just pick stocks that are good, and there are still some good stocks here in Asia. If the markets remain choppy, then I think that that's still a good enough environment that stocks with good stories can re-rate.
And what types of stocks then, very quickly, are you looking at?
Well, I like stocks which have very strong cash flow, which are not too expensive. So one that I will give you is Gas Authority of India, Gail, which is trading on 13 times for approximately 20% growth per year over the next 3 years. I think it's too cheap. So they take gas from the gas fields in India through their pipelines to various power plants and factories. And I like PLDT, StarHub, and Chunghwa Telecom. Those are telecom stocks in Asia with yields, dividend yields in excess of 7%.
Mark, thanks for joining us. Speak to you soon. Mark Matthews there from Macquarie Capital Securities.